Happy Tuesday and welcome to the Business Show, your go-to source for money and finance news in 10 minutes or less every day. I'm Andrew Gincola, and today we're covering Trump's latest tariff threats and why the market is on edge. Then Tesla's massive stock rebound and what is driving that bounce. And Shell's got a new strategy to boost sales and reward shareholders. And Warren Buffett has a bracket challenge, which finally has a winner, and it is costing him $1 million. And Sesame Street is fighting for survival as HBO Max pulls the plug. All that and more. Let's get down to business. All right, so President Donald Trump is once again stirring the trade pot, announcing plans to slap tariffs on automobiles, pharmaceuticals, and other industries. But here's the twist. He's also hinting that some countries could get exemptions. So there are some new tariffs incoming, and he says he'll soon announce those tariffs targeting industries like automobiles and pharmaceuticals. And while talking about imposing new tariffs, Trump mentioned he may give a lot of countries breaks for the upcoming measures. And countries that buy oil from Venezuela will be hit with a 25% tariff on any trade with the U.S. And investors are concerned about political inflation spikes and a looming recession if these tariffs go through. Now, the threat of new tariffs is creating major uncertainty for international trade relations, and higher tariffs could drive up costs for companies and consumers, although we don't really know what the impact is yet, so we have to wait and see. A lot of people are trying to predict what the impact will be, but we really don't know what they are. Now, the big questions are, how will countries that receive exemptions respond, and what happens to those that don't? And if tariffs do go into effect, what will it mean for industries like autos and pharmaceuticals? We'll keep on monitoring this, and we'll keep you posted. So over the course of the last couple of weeks, we have been talking about how Tesla has fallen, and it's fallen rapidly. And this is one of the biggest stocks in the S&P 500. So it is something that we talk about a lot because it impacts a lot of people's money. And Tesla shares saw their biggest gain of the year, surging 12% to become the top performing stock in the S&P 500 for the day. But is this rally sustainable, or is it just a temporary rebound? So Tesla's stock shot up to that 12% Monday, and it snapped a brutal 9-week losing streak. Now, the company's recent slump has been linked to Elon Musk's increasing political activities, and the FBI has launched a task force to investigate attacks on Tesla vehicles, with at least 80 reported cases of vandalism, arson, and peaceful protest targeting the company's showrooms across the U.S. and Canada. Now, the 12% jump signals that investors are willing to bet on Tesla's resilience despite ongoing controversies, and Musk's political involvement in the FBI investigation could impact Tesla's brand and market value. Now, whether this rally is the beginning of a recovery or just a temporary bounce remains to be seen. Now, there are still plenty of questions about the road ahead, so stay tuned. Shell has a new strategy targeting LNG growth and increased shareholder returns. So Shell is shaking things up with a fresh strategy aimed at boosting the liquefied natural gas sales while also rewarding shareholders with higher returns. Now, here's what's going down. Shell aims to grow its LNG sales by 4% to 5% annually through 2030, strengthening its position in the natural gas market. Now, the company is increasing shareholder distributions to 40 to 50% of cash flow from operations, up from the 30 to 40% range. And Shell plans to lower spending to between $20 billion and $22 billion per year through 2028. And the company will maintain a 4% annual dividend policy and continue prioritizing share buybacks to reward investors. So a lot of investors who invest in Shell do so because they are dividend investors and they want to see that dividend growing, which is why they are making some of these moves. Now, with global demand for cleaner energy sources rising, Shell is doubling down on that liquid nitrogen gas growth. And increased distributions and steady dividends are likely to attract more investors. So if you're a big dividend company and a lot of your investors invest in your company for that dividend, when you make moves on the dividend to increase that dividend, a lot of investors will still start to flood into that stock. So Shell's new strategy is ambitious, but will it pay off in the long run? We'll be watching and tell you more. So Warren Buffett has a bracket challenge, and it finally has a winner. And this bracket challenge is costing him big dollars. So for the first time since launching his famous NCAA bracket competition in 2016, Warren Buffett is handing over a $1 million grand prize to a lucky winner. Now, the prize went to an anonymous employee from Flight Safety International, a subsidiary of Buffett's Berkshire Hathaway. Now, the winner correctly picked 31 of 32 games in the first round of March Madness, an incredible feat considering the tournament's unpredictability. And Buffett has relaxed the contest rules multiple times over the years, making this the first time anyone has claimed the grand prize. And the bracket challenge has been a fun, high-stakes tradition within Berkshire Hathaway for nearly a decade. And the competition highlights Buffett's unique approach to engaging employees through creative incentives. And the win adds extra buzz to an already thrilling NCAA tournament, proving that even a billionaire's money can be on the line. So it looks like someone just cashed in on Buffett's legendary generosity. Who's filling out their brackets for next year, and how are your brackets doing thus far? Leave a comment down below on YouTube or Spotify and let me know. All right, the last story is if you have loved Sesame Street since you were a child and it's been around forever, Sesame Street is struggling to survive. So Sesame Street is facing one of its toughest challenges yet. Sesame Workshop, the nonprofit behind the beloved children's show, announcing it's cutting 20% of the workforce to deal with a $40 million shortfall expected next year. Now, Sesame's Workshop is laying off 20% of employees to plug that 40% gap in funding. And HBO streaming services Max will stop airing Sesame Street starting in 2026, cutting off a key revenue source of up to $35 million per year. Now, Sesame's Workshop is negotiating with platforms like Netflix, YouTube, and Amazon Prime Video to keep its content alive. And Sesame Street's upcoming 56th season will focus on humor, music, and animation to recapture the attention of younger audiences who have drifted towards Bluey, Peppa Pig, and YouTube content. Now, the loss of revenue from HBO Max could be devastating for the nonprofit, especially as it navigates unionized efforts by staff. And the battle for children's attention is fierce, and you can see that the landscape anytime you turn on YouTube now, because it is a lot easier to create children's content than it once was. And Sesame Street is fighting to stay relevant with an increasingly digital world. Now, finding a new streaming partner could be the difference between survival and fading into obscurity. Listen, thanks again for tuning into The Business Show. If you know someone who would find value out of this episode, share it with a family member or a friend. Also, if you enjoyed the show, please take a moment to leave a 5-star rating and review on Apple Podcasts, Spotify, or your favorite podcast player. Thanks again for listening, and we will see you tomorrow.